I adore the Tesla community on YouTube. Many of these men have been with the company since its inception and have made enormous sums of money by making accurate predictions. A YouTuber by the name of Dave Lee is among the strongest supporters of Tesla on the platform. This guy makes absurd Tesla predictions. Let's look at one of the more absurd ones he recently disclosed. He stated in a post that he would be able to make his Tesla assets worth an absurd 100 times more. Yes, 100 times your initial investment, which he had originally estimated would grow by a factor of 10. His first prediction was for Tesla's market cap to increase from $3 billion to $40 billion, but he now believes that $300 billion is more plausible. That level of faith is astounding. In the realm of investments, a 100x return is uncommon, if not non-existent. Watch to find out why he believes a revolution as revolutionary as Apple's iPhone is about to occur. But hit that subscribe and like button before we go there. According to Dave Lee, Tesla is only getting started on its path toward innovation-driven complexity. The investor was shocked to hear that just by owning common shares, Tesla stock has gained by a factor of 100 in just over 8 years, as you most likely already know if you're an avid follower of our channel. Tesla's third quarter results were impressive, even with the macroeconomic conditions that exist today. Musk spoke extensively about Tesla's amazing quarter, which exceeded analysts' estimates by $3.32 billion on revenue and $18.7 billion, up 81% year over year, despite the fact that many had expected him to talk about Twitter's future. According to Baron Steve, a few of the key takeaways from Tesla's earnings call were that the company easily above Wall Street's estimates of 2.20 cents to $2.30 per share and $18 billion in revenue. Additionally, the business's operational profit exceeded analyst projections by almost $1 billion, resulting in a $5 increase in Tesla shares during after-hours trading from approximately $976 to nearly $1,017. Many rely heavily on their interpretations of the earnings release. They assess how their business performed in comparison to analyst forecasts for its profits per share, revenue, margin, and other metrics. He continued by saying that it doesn't matter if the company's results disappoint or wow the analysts because the majority of regular stock shares are unknown to them, because some of them work for firms where they don't even own any stock. Expectations for young, high-growth companies are sometimes mismatched by experts and investors, but as Tesla has demonstrated, it is true that the latter have been outperformed for some time now. When Tesla released its earnings report in May, analysts were surprised because they had been paying more attention to how much the business had outperformed analyst estimates than to whether or not it had exceeded investor expectations. But because the firm had only slightly exceeded or met market expectations, Tesla's share price only rose by 6% after the release. Due to recent strong delivery statistics, which triggered the call and declaration, committed investors already had high expectations for Tesla and its management. It makes sense why this surprised you. Lee asserts that a stock's worth is determined by the company's capacity for making money. Therefore, revenue limitations are the reason why Tesla's first quarter earnings were below forecasts. Credit Suisse claims that due to heightened government measures to suppress the COVID-19 virus and an increase in the number of confirmed cases in China, Tesla's Gigashan High facility was shut down on March 28th. Swiss stated that although an electric issue forced the Shanghai plant, which produced over half of Tesla's vehicles last year, to close for several weeks, the firm remained upbeat because it appeared that Tesla's management had everything under control. Since the Shanghai plant is the largest by output and may see a decline of almost 90%, the idling, which started at the end of the first quarter, was predicted to have a major effect on the company's performance in the second quarter. Tesla projects that 1.47 million vehicles will be delivered this year in total, with deliveries in the current quarter expected to follow those in the first 3 months of the year. Lee says that in order for Tesla to keep growing positively each quarter, it needs to produce more cars than investors anticipate and make more money than they had projected. Many people share Dave Lee's confidence regarding Tesla's progress by 2030. ARK Capital stated in an investor letter dated the first quarter of 2022 that it anticipates Tesla shares to yield a 10x return by 2030 and potentially even more. Due to the company's largest holdings recent upswing, it expanded its stake in Tesla in the first quarter of 2018 with the assumption that the company's stock would surpass the S&P 500 during that time. They estimated that Tesla was only now beginning to see major growth and that it still had at least 10 years of development ahead of it. It's useful to see how Amazon weathered the financial crisis and the NASDAQ boom. Gary Black, an investor in Tesla, also offered some intriguing forecasts regarding the future of the hybrid electric car mix, stating that the industry should be valued at $4 trillion. With 1.4 billion shares outstanding, Tesla would have a market capitalization of about $4 trillion. Based on Black's forecast that the worldwide adoption rate of electric vehicles will reach 60% by 2030, the company is currently valued at $1.09 trillion. By the end of the decade, Tesla is expected to produce about 10 million vehicles annually, with global sales of light vehicles reaching 85 million units based on 100 earnings per share. However, as Black prophesied, things can get worse before they get better. For instance, numerous variations occurred in April 2022 at the critical $1,000 threshold, during which the price of Tesla's stock dropped from a peak of $1,052 to a low of $902. A shift in investor opinion against high-tech companies is seen in the recent drops in the stocks of Apple and Microsoft. Concerns have been expressed about the frequency of seemingly random shutdowns in China. It is difficult to see how Tesla will be able to meet its delivery targets given the circumstances in Shanghai. Wedbush's Dan Ives, a Tesla bull, emphasizes this. Ives stated in the memo declines on Tuesday that the greatest concern for the future is how bad China's manufacturing problems are going to be. According to one analyst, Dan Ives believes that Musk is in a horrible position for the second quarter of the rest of the year, since there are a lot of unknowns around the second quarter of China production, which will affect expectations for the rest of the year. To the best of my knowledge, Cathie Woods is unfazed by these tales. According to a recent projection made by her company, ARK Invest, Tesla shares might potentially be valued at $4,680 by 2026. According to company projections from 2016, a $3,000 share price is anticipated, while our share price is anticipated by 2025. A previous post stated that by 2026, the price in the bull case is expected to reach $5,000, while in the bear case, it will reach $2,900. Naturally, $2,900 is a lot more than the stock's current price. Investment company ARK projects that by 2026, Tesla's valuation would almost quadruple. Even in the worst-case scenario, we feel our Tesla model is methodologically conservative and have written to investors to that effect, even if it is calibrated to our 2026 predictions. In 2026, we predict that Tesla equities will behave more like those of an established company than a high-profit growth one. Dave Lee has often expressed his intention to hold his stock for the long term and his belief that Tesla would enjoy phenomenal growth by 2030. His faith seemed well-founded. This is probably due to Tesla's lower capital investment per incremental unit of capacity this year, 7,700, as opposed to 84,000 in 2017, according to Kelly's Blue Book. From January to March of 2022, Tesla ignited the electric vehicle market in the United States. Tesla's accounted for 75% of all electric vehicle sales in Q1 2022. In 2017, sales of Tesla's Model 3 and Model Y accounted for 68% of all sales of electric vehicles in the US. If those figures are accurate, the Model S and Model X cars sold by Tesla accounted for 7% of the company's total vehicle sales during the third quarter. With the support of its gigafactories in Shanghai and Berlin, as well as its new headquarters in Texas, Elon Musk's firm appears prepared to challenge for the top spot in 2023 when it hopes to surpass its 2022 production output. Later this year, it also intends to start producing its other cars, which include the Roadster, Semi, and Cybertruck. We would be interested in hearing your opinions on this. What do you think the stock price of Tesla will be in 2030? Please comment. Naturally, hit the like button, subscribe, and I'll see you in the following video. Music.